Welcome to another day in the Matrix. This is a Red Pill podcast number 112. Hope you're all having an amazing weekend out there. Make sure, before we get started with this, get relaxed. Grab yourself a cup of coffee or tea if it's the morning time, or a glass of wine, beer, or any beverage of your choice. Going to be jumping straight into things today. I know last week's podcast was a little longer than usual, but I just wanted to give you as much data as possible. Again, if you are new here, welcome to the Wolf Pack. It's so great to have you with us. If you have yet to get Discord access, just go ahead and send me a direct message on Patreon with your Discord username and the last four numbers after your username, and I will reply back to you on a Patreon message. And doing amazing with the coin voting system for the altcoins. In today's podcast, we're going to be covering Singularity Net, Engine Coin, Gala, XYO, and perhaps if we have some time, we're going to be reviewing gold and silver, precious metals, getting into those charts just to recap what's been going on over the past month since I last reviewed them. So without further ado, let's jump straight into things. Again, just a reminder, we got those big dates of May 22nd and May 23rd coming up, which I thoroughly decoded in last week's Red Pill podcast and in the recent YouTube video I just released. So definitely go check those out if you haven't already. Since last week's podcast was a little longer than usual and we discussed so many different concepts and theories leading us into the month of June, I'd like to kick this one off with just a couple things regarding dates and the decode, and then we'll move straight into the charts. So just a little recap on the last date that I revealed in my recent YouTube video. We have May 29th connected to September 17th, which is the last day of Rosh Hashanah, the last day of Jubilee, by 111 days. And this 111 connection ties to the 22nd anniversary of September 11th. And since 9/11 is on the day leaving 111 days in the year, and you could see that right here. So getting back to this connection with the 111, it's very important because May 29th actually starts off the 22nd week of the year. So again, 22nd anniversary and May 29th in the 22nd week of the year, connected by 111 days to the last day of Jubilee. Definitely important. And this connection to September 17th, crucial because it is the year of 5783 coming to an end, Hebrew year 5783 adding up to 23. And May 29th is also a 23 standard date numerology and also a 77. And this is where it gets even deeper. If we connect this to last Rosh Hashanah, last year, you're going to see that this day of Rosh Hashanah, September 26th of 2022, has the same date numerology, 77, 77, and we have those 23s right there. So remember, this date was into the end of the Shemitah year, which is that 7-year cycle, and it's what moved us into the Jubilee. So going back to the September 17th connection, it's amazing how this also starts the Hebrew year of 5784, and naturally that adds up to 24, which is also the standard date numerology of that day. It's just mind-boggling how this all connects to this. And with this 111 connection back to 9/11, that being the day that leaves 111 days left in the year, of course, we've went over how this adds up to where that ritual took place, which was New York with the 111. And what's also really important about this date, last thing I'll say, and another reminder, 9/11 happened on a Shemitah year. So you had the dot-com bubble back in 2000, and moving into the end of that Shemitah with that final ritual of 9/11, and you all know how that went down. So now, here we are. Last thing to say about this date is this will be a Sunday, which is the start of the new Hebrew year. And this new Hebrew year will be transitioning us into the year of the dragon. Again, the day of the sun, and the dragon is associated with the sun. And for those who asked or are about to ask, yes, I will be doing a Year of the Dragon Decoded next January to kick off 2024. But for now, we will continue to focus on utilizing our Year of the Rabbit Decode, which centered specifically around the numbers 52, 25, and 12, as you can see right here. Rabbit 52, 25, 12, and the number 23, because it's the Hebrew year of 5783, as I showed you moments ago, with that 23, which is the year I'm calling Jubilee. You have that 23. And also in Chinese zodiac, it's called Year of the Hare. And you could see hare spelled like this gives you that 23. So it all comes full circle. But if you have that 23, you're going to want to mirror that number, which brings you to 32. Again, hare also has that 32. And I just told you with rabbit having the 12 in Chaldean, we're going to mirror that. That gives you the number 21. And we see that number 21 a lot in the word Saturn. This is the key player in this crypto market because crypto was created by the mythological character called Satoshi Nakamoto, who is Saturn. And this whole concept of us being out of a Saturn year, the Shemitah is a Sabbath year, but we call it the year of Saturn. And the Jubilee theme, which comes around once every 50 years. It's 7 cycles of 7 Saturn years, and then on the 50th year, you practice Jubilee. This is why the Saturn character is still very important in this year of 2023. Hope that all makes sense. And we'll be moving out of that Saturnian energy associated with the year by the code and pivoting into the Jupiterian energy at the end of this Jubilee and throughout the year of 2024, the year of the dragon. So let's start to transition here. We are now moving out of the new moon energy into the first quarter moon of May 27th. Let me just quickly pull it up right here. We have the new moon as of yesterday, moving into this first quarter moon coming up next Saturday, week from today. We discussed that time frame around the 22nd week of the year, as you can see right there. And of course, this year is heavily coded with the number 23, as I just mentioned earlier by the code. And the 23rd week of the year is June 5th through June 11th, right after the full moon. That's going to be on June 3rd. You could see that right there, also landing on a Saturn day. And that June 3rd or June 4th full moon is in Sagittarius. So full moon in Sagittarius, sign ruler of Sag is Jupiter, which is the planet associated with expansion and usually positivity, good luck. So we'll be in tropical Gemini and still in sidereal Taurus until around June 15th. And remember, Taurus, the bull, associated with finances. This is why we call it bull market. This is why there's the bull in front of the New York Stock Exchange, and the sign ruler of Taurus is Venus, which is tied to our year of the rabbit decode. Remember, rabbit equals that 25, as we spoke about earlier. Venus equals 25 in Chaldean. Sidereal Taurus ends right around the time of the new moon in June. As I told you moments ago, we'll be in sidereal Taurus until around June 15th. So just to show you, that new moon in June will be June 18th. So as expected, we should all anticipate lots of juicy things to happen in this market between now and this time frame that I'm talking about. And I'll finish off this decode with some food for thought. We have brought up the number 25 a couple times in today's podcast so far, and that's of course tied to the year of the rabbit, and we have that 52 in rabbit. We also have that tied back to cryptocurrency with that 52 connection right there. We have crypto giving you 25, and something interesting about Bitcoin, the day that it hit the all-time high of 69,000 was technically on November 9th of 2021 in the United States. which is the day leaving 52 days left in the year. I can just show you that really quickly by going over to here, 11/9/2021, and you're going to see that right there, that 52. Of course, it did hit on the 10th according to the time that Bitcoin trades in, which transitions between 7 to 8 p.m. as the cutoff date, or the cutoff time, in Eastern Standard Time, but it doesn't end actually at midnight. So it's kind of confusing when you're looking at the data on TradingView or CoinMarketCap or any charts you're using, just because that's the time zone that it's timed. I think it's UTC time zone. But anyways, that's irrelevant. It was this day of 52 days left in the year, transitioning into this day. And another fascinating connection to this is it's the 111, just like we were talking about with New York. All right, so I gave you tons of 25 and 52 connections. I know the last one, that's pretty big. You could see 25 in crypto, and then the ticker symbol of Bitcoin, 25. So the 25th week of this year is now on my mind. And if we look at that, that's going to be the week of June 19th through June 25th. And that very well could be the week for Bitcoin and the crypto market to make its final move before a deeper correction into the fall time. Also, this is the week of the summer solstice, being on June 21st. So again, any astrologers in our community that would like to share their gnosis, feel free to share in our astrology text channel in the Discord. We'd all greatly appreciate your insights. I definitely would, so please feel free to share that stuff. And as I was speaking about moments ago, with this idea of June 19th through June 25th, that's perfectly in the time frame of the window that I shared with you guys theoretically over the past couple podcasts. So, final thing to say, just a quick reminder, 2016 we topped out in June 13th, and 2019 we topped out on June 26th. So that's pretty much right there. And I told you how I feel about Wednesdays. So the Wednesday that's happening during that week will be on June 21st, the day of the solstice. So I'll see what my schedule's like, but perhaps I could be making a decode for this upcoming solstice, the midsummer, because of this big connection that we just found. So stay tuned for that. If you guys are interested in that decode, just let me know in the comments section of this Patreon post, or maybe it'd be better if you left it in the YouTube video post, just to kind of separate that from our coin submissions that you guys vote on. All right, so we're going to just move straight into the charts now. Like I said, we're not wasting any time today. We have a lot to get into for sure. We're starting out with this chart right here, which is the Bitstamp chart on the daily. We had this pointed out a while ago. We had a little bit of a hold on this bottom support locally, and then we broke through it on May 8th. And we did officially pretty much hit that measured move. If you're taking from the bottom of this support line to this resistance top around 30,000 on April 26th, I'm going to get out of log scale for a moment into linear, and I'm going to show you what I'm talking about. It's pretty much this measured move right here, and it's pretty close. I mean, it's pretty close. If we were to move it to this retest right here, which was a sign of a rejection and treating this prior support as a new resistance, you just move it to right there and it brings you within, it's pretty much spot on. So you could give it a little more or less. It doesn't really matter at the end of the day. This is crypto. There's so much volatility. There's a lot of leverage. So it's hard to tell. Now, if you really wanted to extend this and go from this wick right there to this upper wick, that could be telling us that there's an opportunity for going even lower. It's about 25,200. And then we, of course, could be considering this larger pull right there from that top to bottom, although that's technically not how I would do it. And then that brings you slightly below 25K. And we've talked about this idea so many times, the idea of a $25,000 Bitcoin and how that could still even be bullish just because we never really back tested this breakout right here. We had this higher high followed by this washout into March 10th, this Silicon Valley Bank failure, and then just swooped right up to a new higher high. This is insane volatility, and we really didn't fairly back test this, and I would not call this a wick on the 12th clean enough for me. I would have actually rather have gotten the 25,200 out of the way or the 24.8 out of the way before just moving up now. So I just wanted to show you that measured move and how technically we have completed it. And this is now something that we could get out of the way and kind of move forward from. For anybody who uses patterns as part of their analysis, we are now in a different type of energy after having this 12th of May test into slightly below 26K. And we could just move on now to a different form of analysis. Again, very experimental here. We've talked about these 247-day cycles. I just want to remind you guys that we have right here a peak low, and there could be some significance to this because this was technically the lowest we went in this microcycle leading into this bull trap on November 6th, which was right before the lunar eclipse, where we saw FTX fail. FTX pretty much go to zero. So this day of September 21st, if we're going to measure it over 247 days, it brings us to May 26th. Now, for anyone who watched my last YouTube video, you probably remember me talking about this because I was sharing how we saw right over here on May 8th, not May 8th, we saw on March 29th, we got a 58-cent test on XRP. And that was the microcycle high, which led to a correction that stopped on May 8th, which is the date 5/8, again 58. So you have 58 cents, 5/8 date, and XRP in Gematria is the 58. It's a lot of 58s. So what I thought about, and I shared this in my last YouTube video, but I'm just recapping it now, is how 58 days after this microcycle top of 58 cents, brings us to May 26th. Just like I was showing you here on this 247-day cycle, this happens on May 26th. It's a Friday, Freya Day, Day of Venus. Keep that in mind, family. It would definitely be interesting if XRP does decide to make a move specifically because we have this code for XRP, but it's just interesting now that we have confluence with this low right here that was planted on September 21st, 247 days later. We got that 26 to match. So the next one that we get is on the 2nd of June, which is pretty much your full moon. And we'll leave it at that for now. We don't want to jump too far ahead. Now, let me look at a couple other charts. Okay, so I have this one. I exposed this micro Wyckoff accumulation idea, buying climax, selling climax. We have already completed the automatic rally. And now we're sort of in this spring energy where we broke slightly below the lows. We're holding this 27K level. We're gravitating to it over and over again, day by day. Really enjoying that level. Every time we start to get to this 27.5, we get rejected. And that range has now been an area of importance. So if we can start trading above this 382, that would probably be a signal that the next move up to 29K is underway. Again, we're only looking at a 12-hour chart right now, and this is more of a micro form of doing Wyckoff analysis. And if this was to come to fruition, you could actually have a slight backtest into the 382, perhaps near the middle of next week, and then a push up. And it would look kind of something like this move right here of the second part of this M pattern on the automatic rally, except it would lead to a W or more of a bullish breakout. That's the bullish concept. Now, the bearish side of this is if we were to start breaking below this support line right here, I would actually call it 26,400. That would be your local low closure. Actually, let me quickly go to the daily and confirm this. Wow, it's pretty much 26.8. So let's just call it 26.5. If we were to start closing below 26,700, 26,500, that would make me start to assume that the $25,000 backtest is in the cards. And we had just talked about that moments ago with this whole concept over here and backtesting that prior fractal. And if you guys paid attention a couple podcasts ago, I talked about the 3 key scenarios after this top on April 18th. Scenario number 1 was us coming down into a 30K rally, lower high bull trap. this bull trap concept came to fruition, so we got out of there. Then we had a rollover, and we did get into 25K slightly. That was scenario number 2, testing into the 24,500 to 25,000 range. Now we just need to see, is Bitcoin gonna use this moment as a spring, or is it gonna fall one more leg lower, get that test into fulfilling scenario number 2, and then what will it do next? Will it move on to scenario number 3? Now, we have seen during Mercury retrograde at least a 22% correction, I believe, and we've only had about a 16% correction now. Keep that in mind. If we were to get about a 22% correction, that would bring us into 24K. That would still be a higher low. You have our low right here, higher low, and that would still be a higher low. That would still be maintaining a bullish structure. So we can't really call for anything super bearish until Bitcoin starts closing below 20,000. And that's really hard at this point. Maybe if you wanted to be fair and just disregard this moment and consider it like a black swan, then we would hold 21.7. It's really not much of a difference though when we're talking about crypto. So we have been stuck essentially in this horizontal trading range now going on 64 days. Something's going to start to change soon. Bitcoin usually only lasts about, 2.5 months at best in a horizontal trading range before it makes a decision. So let's get rid of all this stuff now and go to a more traditional analysis. We'll go to this weekly because we're closing that up very soon. Let me turn off all this mess, go on log scale. All right. So last week's close was definitely not good. We can see that it was bearish for sure. We closed on another weekly low in this microstructure. We are still holding the 200 simple moving average though on the weekly, so that's good. We have the 200 exponential sitting around 25 flat. We have the 200 simple holding us as a support thus far. We'd really want to get back above the 8 simple moving average. That would be ideal. Let me turn those off for now and look at the EMAs. And the EMAs are looking pretty strong. We can see that we're holding the 13. We have the 21 to 34 in bullish posture. These are all sloping to the upside. So by the EMAs, we're looking pretty good. And this was a very different energy since pretty much the last time we had these cross to the upside was back on the C19 crash. So you can see that the red is above the blue, and the red was above the blue for this whole bear cycle. And now that we've had it flip, this is typically a pretty good sign. And if you see, once we get above it, we like to hold it as a support and continue that posture. I don't want to fully say that we're there yet because I'm comparing what we're in right now more to like this, where you can see the same sort of concept. We have this flip right there where the red is above the blue, and then once it flipped over, we maintain bullish for a really long time. But here on an automatic rally, we could have it just flip for that moment where we get this red above the blue, and then once that blue flips and crosses, that would be your 13 crossing above the 34, you're in a little bit of a bull posture. And once they cross to the downside, you kind of want to be cautious. And when it happened right there, we got a bull trap, which led to that C19 crash. I still actually believe Bitcoin would have corrected regardless of C19 at this moment because this is so many lower highs. I know it's a little theoretical, but still sort of the same idea here. And we're above all these EMAs, so it's looking pretty good. It's actually looking pretty similar to how all of our automatic rallies look. So I would really like for Bitcoin to close back above 30K. That's asking a lot at this point, but we're only at 27 now, and we've seen single weekly regains happen in short order. I'm not being bullish. It's just how this market moves. Okay. We have a 5-day right now. Let's see when the next one's coming. Okay. So the 5-day actually closes tonight. I would really like for us to get back above that 13. We closed below it on the last 5-day close. Not great. And 8 sloping to the downside, 13 sloping to the downside. Potentially getting rejected off this 200 exponential. That's not good either. Bitcoin has to hold this 21 exponential. Even if we were to dip into 25,000, I would still like us to hold the 21 exponential on the 5-day. So you could take a note on that. Still closing below this 3-day 200 exponential. That's not great. On the 3-day, we want to recover the 8 simple moving average, and we want to keep these in their posture. Yeah, what would be helpful is on, let me see real quick, the 2-day. Okay, the 2-day is looking great, but this 3-day, it's more important. And yeah, we're really hanging in there. I think this 34 is very helpful for us right now, but still, we could have a flash down. I got to admit, after a couple of these charts, I would not be surprised if Bitcoin makes a very volatile move soon. Yeah, I think we're getting ready to make a move, just by everything I've looked at. And we could go both ways, literally, just like we did back on March 10th. Just boom, boom. I'm just analyzing as much as I can. Rejection off the 13, that's not good. We got the 55 sitting on top of the EMAs, that's not good. Okay, the 2-day, the 2-day is looking all right. The 3-day is more important though. So yeah, Bitcoin needs to get back above this 28K level. 28K is first order, 30K would be ultra, bullish, because that would be a decent back test. Now, let me turn off all this noise and show you what's going on in this 2-day. Pay attention to this. When we had the Wolf Cross come in on January of 2020, like basically the beginning of the year, we came right back to that 55 simple on that flash crash with Silicon Valley. Now we've back tested it on May 11th, 2 months later, pretty much exactly. Getting back above that 8, we held it until we made a new microcycle high. And we still have the 8 above the 55. This could be one of the first times where the 55 crosses bullishly above that 200 exponential since, my goodness, July of 2020. So it could be ultra bullish. It just needs to get back above that 8. It needs to do something similar to this crown top right there, this wave. Now, if we compare it to the last automatic rally, you can see that this 55, when it crossed above these 200s, Bitcoin finished off its automatic rally. And then once it started to have the next wolf cross to the downside is when it came down back to the 200 simple again. So the 200 simple right now is sitting at 23K. Let's look at this iteration right here. So we can see this 55 simple, it crossed above around December 2015. And we did not see it cross to the downside until 2018. That's about 3 years. Fuck. From 2020 to 2022. It's about 2 years. It's shortening, but it's a very powerful sign. So yeah, this is a good cross to have, but we need to get out, and we're squeezed between that 8 simple and that 200 exponential 55 cross right there. It's good though. Like, this is what I'm trying to say right now is, as we coil up, as we look at the shorter time frames and the Bollinger Bands start to constrict more and more, and we're getting these key macro crosses, 3-day, 5-day, 2-day crosses, these are huge, especially on something like a 55 moving average. Last thing I'm going to look at is this 12-hour, and then we're going to move on. Okay, so the 12-hour, we are, wow, okay, we're crossing the 200 simple above the 200 exponential. Excuse me real quick. These are really coiling up. Okay, so major support on the 12-hour at these 200s. Those need to hold. I would say that, yep, this is kind of perfect. If Bitcoin's going to start to close lower than the level that I shared before, which is this daily 26, it's pretty much right where we're trading at. It's like 26.5. If we start closing lower than that, we could have a swipe down into 25 pretty quickly. But the way that this is set up, it's really like because of 60 straight trading days holding this range, it's ready to make a move. So that's like kind of where my analysis goes at this point. It's gonna make a quick move. It's either dump into 25 really quickly and then it's gonna spring out, or we could have a shot up into that 28. Let me show you really quickly. So with this fib pull, a shot up into like this 28, 29K range. And then we need to see how it's going to hold, because we do have this trend line in. If we could do this, that'd be incredible. Be incredibly bullish. Back testing the outside of this, of course. Then you have the breakdown, and then you have that being like your final wave. You could still have another 30K Bitcoin though, in either scenario. And I'll show you why. Look at the way the automatic rally ended back in, and it's not over yet, but I'm just showing you. Look at the way it ended back here. We have the top, we have one shakeout, first bull trap. Then you have another low, a W, which broke bullish right back into the same level. And you see where it hit right there at the 702. So if we were to pull the same fib and show you what's up, you're going to see that it's pretty damn similar. The 702 sits at 29,300, pretty much right there around 30K. So we could have another one of those moves. What you would like though is obviously continuation, breaking above 31 and fully going into this 1618, somewhere around 34,700. That still doesn't even get us into the macro 0.5 fib, I don't believe, or it might be actually around it. Excuse me. Yes, it's like, okay, so that would definitely be. And we rarely see automatic rallies that don't get above the 0.5 fib. With Bitcoin and how strong it's been over the past decade, I mean, really, that's kind of the area to anticipate. Like I told you many times, back in the 2016 and the 2019 cycle, we hit the 786. You could see that right there. And it's hard to determine what was going on this move right here into July. We would have surpassed that by now because Bitcoin's already gotten above the 382. And in this iteration, it didn't quite get above it yet. So we already got above the 382, pretty much right in between the 382 and the 0.5 fib. So this is like automatic rally vibes. One last move up would be very similar, I think, to this fractal right there, moving into this final fractal, which looked parabolic. And we did not have that energy right here on this move. I know it's very messy. Let me delete this. But on this move right here, it didn't end like an automatic rally typically does. But I'm just letting you know the levels. Like after we topped on the 14th, I came out with a Red Pill podcast and I told everyone scenario number 1, 30K, and what to expect with ETH, which was 2,000. That's exactly how it went. So I've been giving you the protection levels to de-risk. Whether you take that into consideration or you don't, that's on you. This isn't financial advice. Okay. I believe this is moments away from doing something epic. And now, because I've analyzed the charts and remember everything I've said about the 22nd and the 23rd of this month, like this Monday and Tuesday could be wild. Get ready for some volatility. I'm excited. So final things to say. Let me look if we have a bi-weekly. Oh, excuse me. I totally forgot we have a bi-weekly close. Okay. So holding this bi-weekly close above 27.7 would be good. Like not on another red continuation. I would like us to obviously get back above 28.8, but that would be asking way too much. Anything's possible in the matrix. We haven't even hit the 55 simple yet. Like, look back here. We got to that 55 simple. Above it. Here, above it. Here, we haven't even gotten to it. We even had a wolf cross. Got above it. Wolf cross. Got above it shortly after. We have our 8 simple sitting at 26K, and we have our 55 simple sitting at 33K. All right? Just consider that. It'd be very weird for this to be over now based on couple prior iterations. All right. So final things to say about the daily. We have that fib pull that I shared with you right here. Somewhere into about this 0.5 to 618 range, about 28,000 to 28,500, 29,000 would be the start of the accumulation phase, or a break below this level right here, somewhere around 26,400 to the downside. That would be a swipe into 25 again, probably around 25,200. And it could continue bullish after all of that, just depending on timing. Still, I'm open-minded to the month of June, as I've said many, many times since the sell in May and go away. Since the World Reserve decoded, which was the follow-up to try to find flaws in the World Reserve decoded, or the sell in May and go away. Sometimes it's hard to remember because I release those so close to each other. And I got a couple people asking about the differences in those that are newer here. Just to remind you, the sell in May and go away decoded, I released first, and then I had a lot of time to meditate a week after that, where I started questioning, well, why was the 2016 and the 2019 cycle ending in June? And then I started to find what was going on in July and August historically, and it started to make a little more sense to me as to why we were pushing up into that time frame of June for Bitcoin. Even in 2015, we went up into the early July time frame. If you look at what it would be this year, it would be around the July full moon. So, I mean, no matter how you slice it, it's still a little bit more time. And in 2015, the 2016 cycle, we had eclipses to start off that solar cycle, and we went through those eclipses. We definitely had volatility in the process, but we went through those eclipses and then had our automatic rally. 2019, on the other hand, we finished off on the automatic rally, pretty much what it seems like right now, but we didn't have nearly the same results. So again, hence why I'm open-minded. So here we are looking at Ethereum. We have a similar trend line showing you a rejection level to consider, probably somewhere around right here. And we have a fib pulled from the current high down to this swing low on the recent test, and we've been getting rejected at this 236 fib, as you can see right here. Extend that out. So you're getting rejected at the 236. Typically, you want to get back above the 382, and because this 382 intersects with this trend line, what you would like to see is something like this, maybe a brush to the 0.5, and then swipe down quickly to back test, and then boom. Then you want to see closures above the golden pocket. That would be your signal of what we would call an SOS, sign of strength, backup phase, continue. And that's the same sort of concept as this chart right here with Bitcoin. Or did I get away from it? Apologies. Anyways, it doesn't really matter. You guys saw the chart. So just an idea here for the bullish breakout, and that being more likely. But then again, we have the same concept on the downside. If Bitcoin starts to close below that 24.6 area, then you would anticipate closures incoming for ETH below 1750 and a swipe down to probably your 382 fib. Pretty much 17,000 on the nose. There's 1,700, excuse me. So this is looking pretty clean. Rejections clean at the 236. Again, kind of with that setup of energy to make you think that a move is coming soon. It's been pretty much trapped in the same amount of time, horizontal trading range, 63 days. A move is coming. And with backtest down on this level, you can see that right there before this shot up. That wouldn't surprise me either. If we were to get one more 25K Bitcoin test and a 1,700, maybe even 1,680 test for ETH, and then a little bit of pump back. You can see this chart is equally as crazy as the Bitcoin chart, with this dump down into March 9th, March 10th, followed by this buyback. Insane. Again, all kind of pointing to May 22nd, May 23rd to be some wild action in the market. Let's go into XRP. XRP is doing pretty good, actually. A little bit more bullish, I would say. Here we have a pretty clean chart. we have a fib pulled from that swing high to that swing low. We've gotten above the 236 pretty nicely. A little bit of rejection here around 47 cents, which is your 382. And as I told you earlier, when you get above the 382, you have this automatic rally concept, and we're talking micro right now. Then you shoot up to typically what your prior structural resistance was, which is looking at about 53 cents, and maybe a little backup followed by a continuation. LPS, SOS, LPS, SOS continued. So there's clearly something I'm seeing here, which is this. We're touching it right now. So we have this current high, couple rejections over here before falling down again, and now we've gravitated back into this line perfectly at the 382. So it's kind of ahead of the Ethereum and Bitcoin chart. Again, the same idea. Or we have this rejection, which could turn into a W, or double bottom, which leads to a break. Now, that would be very weird for sub 40 cent XRP at this time, just because of how suppressed it is, and this move wasn't really that crazy. So yeah, where we're holding right now is pretty much in this level right there. That's kind of where we're backing, and you could see that denoted by the same resistances and supports. We had a little bit of time under this, but it didn't last too long. Okay, let me look at some moving averages though, because it's been a little bit of time, I think, since I've analyzed XRP with the moving averages. All right, okay, we're above all key EMAs. We were getting rejected on them back on the end of the month, so this is really nice to see. We would like to see this 13 EMA cross above the 21 and then head into a bullish posture. Right now it's technically in a bearish posture, if you remember what I was saying earlier with this 34 above the 20 or above the 13. We have the 55 above us. That's not the best, but we could easily get above that, about 48. That would get us into the 0.5 territory, kind of the idea that I shared before. And until we get a wolf cross of this 8 above the 55, there's really no parties just yet. But we did on the 12 hour. So the 12 hour is looking real good, like the start of something. You guys know me, by the way, like even when it comes to swing trades, I don't really go lower than the 4 hour. But as a more macro analyst working with, so many people to educate them, I do like playing around sometimes with the 12 hour for educational purposes. I think it could be helping you get prepared for anything on the daily, obviously, and keeps your focus away from these really short, volatile time frames. One moment. All right, so let's take this play by play with Ethereum on the 12 hour. We have a wolf cross with this 8 above the 55. We have the 200s below us. Very good. We have our EMAs in a almost bullish posture. So when we get our next 12-hour close, which is coming in on tonight's daily close, we could have a couple things. One, are we going to get a green continuation candle? Two, we're going to get that 21 above the 34, putting these in bullish posture. And then you're going to start to see this red, orange, and blue moving average solidify closures above this 55, and that's going to put the whole band in a bullish posture. So that's really good. And we're only at 65 on the RSI. So this pump was pretty nice. And actually for XRP, it's looking like this one, where we had some wild action, but now we're just on a green rally. It's looking pretty good. Getting above that 382, above 47. I mean, honestly, 48 cents would be best right now. Putting you on a new horizontal high from these April 29th closures. So that's 48 cents. That'd be great. Let's look at the weekly. Yeah, really nothing to say here because we never closed a weekly above these key levels going back to October highs. That's what we really want. And I've said that a lot. I said no parties on XRP until we're getting macro candle closures above 54 cents. We never got that, even with this pump. All right. Let me actually revisit ETH really quickly on the 12 hour and Bitcoin and just see if I'm finding anything. Just to be fair. I should have done that before. It doesn't really matter though. We are here now, and that's what matters. I probably looked at Bitcoin on the 12 hour though. Yeah, nothing really exciting there. Nothing really exciting here. Okay, fine. Yeah, I'm glad. It's nice to see this happening with Ethereum on the 12. That's really good. All right, so I'm going to leave it at that. Back test of about 44 is possible on a wick to the downside if we're going to see Bitcoin peel over a little bit. But for now, things are looking pretty damn good. We're moving on to Singularity Net, AGIX. We're going to put this on the daily. We're going to turn off all of this, and we're just going to analyze the candles. Whoa, okay. Holy shit. Yep. This hit a double top in February? Holy moly. Okay. 1000%. Fuck me. Right on. Okay. This is weird. You don't see this too often. Fib pulled great. Oof. Double top. Okay, let's get back on the rails here. Just I don't see these charts too often. Okay, we got a 95% pullback. What do you even call this? I mean, ugly, super ugly. But if you were in it in this horizontal trading range between this 236 and this level at about 3 cents, then congratulations, because this looks like one of the only projects that really rallied like such. But the way that it's keeled over since is what's a little weird. So let's take this play by play. You have your buying climax, selling climax. This could technically be some sort of weird rally, but it's short-lived. Like it tried playing at these highs and it just couldn't do it. High, lower, low, lower, low. Technically, you have this low settling at about 16 cents. Sorry, this is a weird chart. I don't see charts like this too much. So this is like kind of pushing me to be kind of where I like to be in a different essence. I love it. All right, yeah, got to put up some moving averages. So you can see clear on the daily that 200 simples holding thus far. We got that 200 exponential. We were trapped in it for a little bit. As of Friday, we popped out, but we are now getting another lower high technically because we got our high, lower high, lower high, lower high. 55 sloping to the downside, holding on the 8. If we start to close dailies below that 24 cent level, below this 200 simple, I suspect we're going to come down to about 20. And if we start to play around in that area for a little too long, this could very quickly return back to the 382. And now what's alarming about this is we do have a little fractal coming in here around 14 cents with this 0.5 fib, but then below that, it's like thin air straight to the 236. That's 6 cents. So that would be a major loss of another 70% from here. So this, I don't like this structure. I don't like this chart. Again, I'm aware enough to the point where it's like when you see these sorts of breakouts, they're very ritualistic and they're not driven by much, but a tiny amount of liquidity. It doesn't take a whole lot to move one of these up this much. Let's quickly tune into what the market cap is on this. Why don't they tell me anymore what ranking it is? That's really annoying. How CoinMarketCap, I think I'm gonna have to switch. CoinGecko. I mean, CoinGecko might be better. It's getting pretty rough on CoinMarketCap. They're just getting too fancy. Verify that you are a human. No, I am a complex AI algorithm sent from 109. All right. Yeah, still doesn't take anything to move this. Also, hope you guys are having an amazing weekend. Hope you're enjoying the podcast so far. Singularity Net. It always reminds me of that one Bright Eyes song called Singularity. I love that song. Yeah, okay. Let's look at the weekly. It's all going to look like chaos. Yeah, I mean, this is one thing to look out for right here. On the 8 simple moving average on the weekly, you see when you planted closes below it, then you start getting rejected by it. Now we're coming up to it. If we get another rejection on that 8 simple, we could keep keeling over and over again down to that 55, which sits you right at that fractal over there that I was telling you about, pointing to this right there. The reason why this is so key for me, and I brought it up, is you look at the style in which this fell, and then boom, got back to this level, rejected off that 200 exponential, and then continued down again. So we clearly back tested it on this test here. You can see right there, if I was to delete all this, I'll show you what I'm saying with just some basic trend lines. So here you have the lower support, and then here you have these resistances, many of them which led to another leg down. Then when you got above it, we started holding the prior resistance as a support, and then we went one leg up. So that's a very healthy thing. But since this breakout, we really haven't back tested this area. And if I was to pull my fibs now, you're going to see the story. And you see where those two red lines are at right there on that 0.5 fib. That's a key level, you know? So gravitating back to that could be in the cards very soon. And then the difference between that 0.5 and down at the 236 could happen in a single week. And, you know, this is the same story I told the Hex community. By the way, shout out to the Hex community. You guys have been showing me a lot of love, but this is the same story I told them. And a lot of people didn't believe me that this was possible. And again, I know that Pulse Chain launched and all that, but really, who cares? It's analysis. You have the analysis. You trade the plan. You can. Nobody knew when Pulse Chain was going to officially launch. It was like a theory, a conspiracy for a while. You know, it was getting delayed. Again, congratulations, I guess, to whatever updates happened on that particular coin. I don't even want to talk about this coin today, but to mention the TA is what's most important. The idea of de-risking into these automatic rally levels, regardless of what could happen, regardless of what ritual can be underway. And it falls fast, you know, straight into these lower support levels. And we could have the same sort of thing happen with this project. As fast as it goes up is as quick as it could go down. So yeah, if I was somebody in profits right now with this, regardless of the upcoming Bitcoin move, I would just protect myself. You know, I would want to protect myself as the priority. So just words of wisdom on that. Now we're moving on to Engine. All right, so here on Engine we have, wow, break right there. That's pretty crucial. Oh, wow, that's perfect. Okay, great. So we have from this swing low to this swing high, it's just a bearish fib pull. We're on log scale. We're going to make sure that this is log setting turned on, correct. And we came straight down to this 1618 golden ratio on the downside. That's a really cool trick. It works most of the time, even on these altcoins. We have a lot of data to work with though, so let's get to that. So we have in this recent run a correction of about 95%. Pretty normal. It's what we see most of the time. Here's your automatic rally, by the way. You see how this went back in 2019 for Engine? This is a clean structure. You have your blow off top, buying climax to the selling climax, automatic rally, and let's analyze how that went. Oh, would you look at that? Right at the top of the golden pocket. So that's another thing that we teach here. And where did we go after that? Straight to the 236, just like I teach. So this is a really clean example of what a Wyckoff schematic looks like. It never really had a spring technically. It just had this black swan and then it maintained pretty bullish. This is actually a good looking chart. It's insanely volatile, but based on structure, this is your C19 lows. We're much higher than those lows. If you take off of this structural support, we're still up about 500% on this. That's amazing. This looks really not bad. Has this double top sort of deal, similar to Bitcoin, similar timing to Bitcoin. So it likes to follow Bitcoin, you know, for the most part. Now, what's weird is this topped out in March and Bitcoin topped out in like June. So it got a really sharp injection of liquidity here, like parabolic, fast. Something happened, similar to like that singularity chart we just looked at. All right, so now let's delete this because we know that we've reached our selling climax and now next is an automatic rally and we can't quite get there. So we have yet to really get above the 236 and obviously not the 382. Once you get above the 382, that's when your automatic rally engages. And it's really nice that you see these rejections here at the prior support line and then one last rejection before we led into the finality of this selling climax. And what this tells me is getting above the 382 is going to lead to your automatic rally pretty simple. We have this clear resistance line. So yeah, something like this would be ideal. Like a pop-up, back test, get above that 382, and then you have your finality of the automatic rally. And I would probably say you're going to hit somewhere in here. Let me pull up the VPVR just to see if I can get some information. It's probably at the lower levels. Yeah, I'm not going to be able to get it at the higher levels because it didn't trade that long there. Yeah, but if I was to determine where I would see this going, it would probably be about here at $1.28. I'm going to show you why. It's going to be $1 to $1.28 in that red range, pretty much around the 0.5. That's what I would assume. So that's pretty decent. That's about 200% run if it's going to come to fruition. So just remember though, right now we are in a very, very weird, kind of precarious time in the market. And this coin is looking good. It's looking good, but it hasn't had that great of a recovery since it's entered this more bearish structure. Consider this trend line right here, though. Could be something. If we get back above that 236, probably going to head to that 382 pretty quickly. And then that would start looking really good because you'd have low, higher low. This is your high. If you could get above 56 cents, that would mark a reversal. So just keep that in mind. Gala. Okay. Yeah, I don't like charts like this. I've analyzed this in the past. I have a swing low to swing high fib pull. We hit the 1618 perfectly. Just extending out these fibs. We bounced pretty much up into around this yellow line, but we made a lower high. That's not good. A low, another lower low. Lower highs. Locally, pretty much since January, we've been doing the reverse of what most altcoins are doing. Yeah, and the reason why I started out saying I don't like this is because it launched pretty much around September 2021. It launched around the start of the Shemitah. It just went up in a straight line because everything else did. Like it just was at the right place at the right time. And then it lost 98% of its value. And it's still not recovered back above. I would assume it's not even back above the 236. Yeah. So it had a little time above the 236, broke below it, and now it's starting to almost get resistance. You want to get above this 382. And even then, maybe you'd be lucky if it makes it back to 11 cents. No information before the C19 crash, no prior cycle, only working with one cycle. It was launched at the right place at the right time. It got to get that final boost of liquidity like everything did. And then it's proved everything I've just said with a 98% correction. Clearly, this is an unsophisticated, retail coin. Whatever technology is behind, I believe it's a gaming token, but it doesn't really matter. It's showing weakness all around, and that weakness in the chart is what it allows me to do is visualize who's the type of investor in this. They do not have strong hands. This is weak hands, probably a lot of leverage, and no conviction in the longevity of this as a part of an investment thesis. So yeah, this is really not looking that great. And I do see probably by September, October this year, we can get back to a penny again and start breaking lower than that for sure. You traded below your launch price pretty much into January, beginning of the year. That's price discovery to the downside. So this thing's still technically on price discovery to the downside mode. Continual lower highs, continual lower lows. Since the start of the year, continual lower highs and lower lows. Yeah, this what this needs to do is get above 6 cents. It needs to get above 7 cents, ideally into 8 cents to push you into an automatic rally. But for now, I don't like this dump V-shaped recovery and then this lower highs, lower low structure. This is not good looking to me. Let's move on. We're on to XYO. Oh God, even worse. Okay, yeah, this is really bad too. Oof. Okay, same time it launched, pretty much launched at the same exact time. Way crazier looking chart. Lots of these just sharp jumps, like boom, lots of liquidity, lots of scam wicks to the upside. Very unsophisticated. Let's see what's up with this. 96% of its value gone. Let's pull a fib. Really no structure, just perpetual down, down, down. Sharp boost up into early January. The same thing with Gala. Came back below the 236. I've started treating it as a resistance. Again, sign of weakness, sign of retail weak hands. Continual lower highs, continual lower lows. Right pretty much back into the structural lows around 0.03 cents. This thing is probably going to go to, this thing has an opportunity to go really low in the future. Like into add another zero between that two. Yeah, really not looking so good. Yeah, the positive thing would be getting back above that 1 penny level, but even then, it would take a miracle for that to happen at this point where we're at in this part of the cycle, unless something totally different happens this time around. But having Bitcoin and ETH, like if you look at the Bitcoin chart, I'm going to zoom out and I'm going to take off all this noise. I'm going to take off everything. Look at how we have end of the year, uptrend. We have XYO. Here is your end of the year downtrend from this kick. So this would be like if Bitcoin was trading at 17,000 right now, but instead it's $10,000 higher. And this is like the highest market cap. People call Bitcoin a scam, you know, like there's still people to this day that like Bitcoin's a scam. But then I look at so many of these altcoin charts and I could just see like how rough it really gets out there. This is like a invest and hold on for dear life, you know? And again, it's a Red Pill podcast. It's spicy. We need to speak the truth. I'm not here to, go into the nitty gritty of who's behind the project and the team and all the technology and this, that, and third. Like great companies go bankrupt during Shemitah and Jubilee cycles, period. Like we've seen it happen so many times. We saw the .com bubble. This is kind of the same essence. We had an end of the 2021, injection from the Federal Reserve System. It brought FOMO into the crypto market. Tons of retail investors pushed in. We had the Shiba Inu and Elon Musk nonsense. It gave a lot of positivity and gave that FOMO energy in the last moment. And since that has gotten severed, most charts are looking like this. And these ones are really particularly rough because they have no prior data. I personally hold off on stuff that doesn't have data before that 2020 timeframe. Ideally, if it could go into the 2018, 2019, even better. And then you got to get with the times. I don't really feel positive at all about things like Litecoin or Monero. It's not because they're a bad technology. It's just because we're moving through this faster now. So we can see in the Monero chart, we didn't get the performance that a lot of people were looking for. The same thing with Litecoin, the same thing with XLM. And it's happening because we're seeing too much younger players who are like into the memery. They're too meme coin oriented. There's too many children playing in this sport. And that is fine. You can be in the right place at the right time with your investment thesis, get in and get out and ride the wave of what some of these kiddos are doing. And that's great. And if you're able to do that, if you have the time to study and do that, then that's beautiful. Fantastic. It's all about leaving this game profitable, But when it comes to these long-term, more sophisticated players, more the people that I'm kind of gravitating towards, the people that are looking to be a part of this early and for the long term and not just getting in and out and paying 40% capital gains tax because of something you did in 2 days, just got to play the game to your personality type, to your goals, to your financial, acumen and where you stand. But when I'm looking at charts like this, I'm like, this is too much of crypto looks like this, like a penny stock. And I hope for the day, and I believe it's probably 2024 into 2025, where we're going to lose this sort of essence of just these crazy 96% corrections. But for now, they're still here. So yeah, really nothing positive to say about this XYO chart. I would definitely stay away from this. Didn't really look at any charts today that were too great looking, but this engine chart at least has data going back to the prior bull run of 2017. This looks pretty decent. So yeah, perhaps into September, October, this could be an opportunity. We'll see what's going on then. So I'm going to wrap it up here, just a little over an hour. Got the Dow Jones opening up later. Things are pretty much on check, on par for course with what I released in my last decode and my last Red Pill podcast, excuse me. We're getting to that time of day where I'm starting to speak a new language. But yeah, we have reviewed the indices. Okay, I'll just quickly touch on gold and silver because I said I would do that now that it's on my mind. Okay, we got this weird triple top thing going on in gold. I don't like that. It's great that we've gotten back above that 786. By the way, this fib is pulled going back to 2020, so it's a really healthy long-term horizontal trading range. We're starting to break out now. Holding on top of these AR levels is really nice. So you have your buying climax, selling climax, automatic rally, spring, clean spring. This is your SOS. So we're now in the backup phase, and the backup phase could look something like this. We could even dip into the 702, depending. And it sometimes looks like a cup and handle deal. Keep this 888 fib in mind. So any gold people into gold, trading gold, 2015 is kind of like your level. It's funny how it's 2016 actually, because I did that decode on the Super Bowl, all tied to Q and Trump and the Eagles, and how the Eagles won the Super Bowl in 2016, and that's again all tied to currency. Amazing. Maybe that could be part of that concept. So yeah, keep that in mind. This does look like a long-term Wyckoff. It's very clean, and it's in its process of a breakout. And I already told you guys, in the year of the dragon, I'm anticipating $2,400 gold. It could even happen before the end of this year, to be completely honest. Now, it would be troubling if we start to close below 1,800, but we're so far above that now. And with this structure, I think we just needed to cool off a little bit. Pretty much just cool off, build some support here at the higher 1900 level, then start closing more macro candles above 2000. Perhaps this monthly close above 2000 would be very healthy. Yeah, so our monthly closure highs are already settled. I would like to see them above the 888, and that would definitely be a sign for potential continuation. So gold's looking really damn good right now. Silver, on the other hand, it's kind of trapped in this range right here. You could see a long-term pattern forming, something going back to support at 2008, a back test on this support of 2020, a couple of back tests here in the middle of 2018, 2019. And then we have this all-time high right there coming in as a resistance, a bunch of resistance, and we've gotten rejected off of it locally just this last week. So now when we zoom out of all of this mess, we can see this is a huge horizontal trading range from 1980. It's about 16,000 days. And we hit this double top vibe. We're like in a huge cup and handle. Cup and handle within a cup and handle. And what I would really like to see is above $27. Closing monthly candles, closing 2-week candles, that would be solid. And ultimately, when you're in this double top vibe, we saw with gold, it was like almost like a triple top. You really want to start closing above that 888 fib. And we even have here on the monthly closures as high as 47. We've talked about why this happens. It's because gold is the 47th element on the periodic table. Surprise. And yeah, that's very possible for silver to have a break towards about the 30s, 33, 34 into the gold move. But right now it's the gold show. Clearly, ROI is more on your side in silver, but for those that are doing the whole hedging game, gold is pretty good for higher net worth individuals. And I might even be considering gold as part of my own personal thesis in the year of 2024 because of changes with ISO 222 and CBDCs, etc. So I'll keep you guys up to date on that. I'm in my process of studying Pax Gold a little. So if you've made it all the way to this podcast and you know about Pax Gold and you're a holder or interested in it, feel free to share that information with us. Would love to know some more. Bearable Bull was the first person to kind of ask me about it and trigger my interest. The only thing I don't like is its ERC20, and I have my own theories about that. We'll get into that another time, but for now, Precious metals are looking pretty awesome, and this crypto market is holding steady. I've given you guys all the levels in both directions. Really, it's about this upcoming Monday, Tuesday, and the 26th for XRP. So keep those dates in mind. I appreciate you guys, sending you lots of love, and I'll be catching you guys very soon in the next one. Much love.